Hey folks, Dan Frio here with your market update for March 3rd, 2025. So in today's topic, we're going to talk about what's going to take place this week on the economic calendar, because our goal here on this channel is to help you guys understand real estate and the financing part of it, because I don't know what's going to go on with the home prices in your area. So what I can help you focus through or manage is home affordability through financing. So my name is Dan Frio, where our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? I'm going to give you all my information at the end of this video so you can understand and also how to reach out to me for some assistance. So without further ado, let's get over to these things, because that's why you're here. So mortgage rates eased a little bit last week. It was kind of like an up and down scenario. One day it was down 2 basis points, the next day up a little bit. So kind of stagnant right now. So we're focusing in on the economic data now that's coming in. The new administration's been in office now about a couple months. So dust is starting to settle maybe a little bit. But basically everything on the forefront right now that you're going to hear about is tariffs. So how does tariffs really play a role in all this? That's what we're going to try to understand today in today's topic. So we want to focus in on tariffs. We want to focus in on the economic calendar that we're going to see for this week. And the whole reason being is, how do we know what's going to go on with interest rates? Well, we keep a beat on what inflation's doing, and we're also going to track what the Federal Reserve monitors in the economy. And this is these things right through here. So without further ado, let's take our deep dive into it for today. So here's what we got for today. Mortgage rates, like I said, they eased a little bit on Friday. I'll give you what the closing bell does today. It's not looking really good on mortgage rates coming down. Looks like they're going to turn the corner and start going up a little bit. Reason why? Let's get over to it. Tariffs. Tariffs now are that poster child that's saying, okay, when tariffs get here, most likely it's going to be inflationary. Well, we have a member of the Trump administration. He's going to come in and tell us a little bit about how these all work and the kind of the content behind it. I wanted to share that with you real quick. So let's get over to the video sections of CNBC. We're going to go right down through here to the most recent one that was just played down in this section right here. So let's take a look at what the administration's focusing in on right now when it comes to tariffs.
U.S. tariffs on Mexico, Canada, and China are set to take effect tomorrow. Join us now, Peter Navarro, White House Senior Counselor for Trade and Manufacturing. Peter, it's always good to see you. What's going on? How are you?
Good to see you back in the saddle, my buddy.
Thank you. I'm good. I'm lean and mean. I even lost weight. One thing we hear, even some people come around on this, on tariffs, especially the reciprocal side. One thing I keep hearing again and again, Peter, is why Canada? Why our trading partners in the North? The amount of fentanyl that comes in up there, I don't know, it's literally like, what is it, like 40 pounds last year versus thousands of pounds from...
Okay, so what they're talking about is the Trump administration. They did go into effect with their tariffs on Canada and Mexico and also China. You might sit there and scratch your head a little bit saying, okay, why Canada? And I was kind of doing the same thing. I'll take what he's saying here, and I don't care what administration it is. If I don't agree with it, I'm going to call it out. So this one's kind of I'll give it a this. His analogy for Canada, I get it. I think they could have done a little bit a little better on this analogy behind it. So let's get his take on this, because again, here's my take on tariffs. You guys probably know it by now. I think they're very much needed in certain areas. But then there's areas that could be kind of overdone, and it's all going to be somewhat inflationary to all of us. Okay, so when you come out and say, "Oh, tariffs aren't going to really do anything," that's not really the honest truth behind that part of it. But I want you to get this person is on the administration, the Trump administration, so I do want you guys to understand his take on this. So let's get back to it.
From Mexico, what's the Canada side of things really about? What are we trying to do there?
What we're trying to do, Joe, is save probably over 100,000 American lives every year. It's interesting to me how we've got just accustomed to hundreds of thousands of Americans dying over the years from fentanyl. But let me explain that it's not just people out there. I mean, everybody's a fentanyl victim, Joe. Everyone in this country, because they either had a son or daughter that died, or they know somebody, or they know somebody who knows somebody. And here's the thing. Fentanyl kills directly. They use it to spike drugs like heroin and amphetamines. But a lot of people don't know this. There were 80 million counterfeit pills that were seized that were things like Ambien, Xanax, Vicodin, oxycodone, all the stuff that people have in their medicine cabinets laced with fentanyl, killing people. 80 million. That's just what they caught. I mean, that's enough to kill a whole country, what's coming over. Now, if you think about the problem, it starts in communist China with the precursor chemicals. It comes in to Mexico and they make the fentanyl, but they also have these pill presses, so they do the counterfeits. And they're using Canada as a transit hub and secondary point to manufacture as well. So this is a Canada, Mexico, China thing. And the fact that we have such porous borders, particularly during the Biden years, made it even worse. And let's not forget, Canada is also a source of people coming in on the terrorist watch list. So this is a serious problem. And it's as sensible to do what we're doing in the name of saving American lives as when we talk about tariffs in another context, that reciprocity is the most common sense thing, Joe.
Warren Buffett was weighing in on whether.
So now they're going to kind of segment over to Warren Buffett. Now, Warren Buffett is basically considered probably the best investor in the United States, like forever. So they bring up the Warren Buffett thing. Here's where I think it goes a little bit awry. And again, I'm going to call it as it is. So again, let's just get one last take on this, and then we're going to go over to what the economic calendar looks like for the rest of the week, how that's going to play a role in the Fed's decision coming up in just a couple weeks. So let's get back to it.
Prices go up, or it's kind of like a tax. Do you acknowledge maybe we could see some pressure on prices? And I'm just wondering, how long will you be patient? Will President Trump be patient if that affects, the last thing that he wants is to rail about the Biden administration on inflation and then to have his own problem. We already got, the bird flu and egg prices, et cetera. How long will there be a resolve? Could you see some wavering there on the commitment to tariffs if the stock market were affected, or if inflation were to come back hard?
Well, let's start with Warren Buffett. I was amused to see Mr. Buffett make that statement when, in fact, Joe, I don't know if you remember this, but Warren Buffett wrote the definitive article on why trade deficits are dangerous. Warren Buffett wrote this beautiful article about how if you continue to run trade deficits in America, pretty much foreign countries will own everything you have. And he had it exactly right. He probably forgot he wrote this.
I'm going to leave it at that point of it. So Warren Buffett, I get what their point is, but his counterpoint, I won't say is there. Warren Buffett is saying basically, yes, it's going to be inflationary. And then they come back and counter with that. So I'll leave it at that. But that's where we are. And so why did tariffs? Why are we concerned about inflation? Well, it's right through here. This is the basic three components that the Federal Reserve really, really monitors. And this is why we monitor these items basically on a single day or throughout the week when the data is being posted. So right now what we're seeing is the federal funds rate is right through here. This is the only rate that the Federal Reserve controls. Don't know if you knew that. Okay, so they don't control mortgage rates. They don't control credit card rates. They control the federal funds rate, which is basically interbank lending. Okay, so what they focus in on to control, inflation and the policies, they look at inflation with the PCE. This came in last week and actually went from 2.6 to 2.5. It's going in a good direction. Unemployment rate just ticked down a little bit to 4. That's historically in fantastic position. And then we go over to the GDP, which is a positive 2.3, and I'll raise that a little bit, and that's still a good signal for the economy right through here. So the economy, as of what the Federal Reserve looks at, this is kind of okay. So now let's look at the economic calendar. Anything coming up this week that could throw a monkey wrench into a lot of things? Well, today, the reason why I waited a little bit, I was waiting for some of these manufacturing numbers to come in, and here's what they came in at. So manufacturing PMI, ISM manufacturing PMI for February, and then ISMI manufacturing prices. So let's see how this stuff's coming in. On the manufacturing side, I'll say that's right on point. On the manufacturing PMI, I'll say that's right on point. And the manufacturing prices, there's a bump up right through there. So prices are going up right in here. We saw the last reading was 54. It's going to 62. So prices are going up in this segment here. The markets really don't put a lot of focus in on this. So what the markets are going to focus in on is the rest of the week. So we have on Wednesday, we have ADP payroll numbers. I'm still not a fan of these numbers, but I'll provide those to you when they come out. Thursday, we're going to have initial jobless claims. And then on Friday, we're going to have the new unemployment rate, the unemployment numbers, and everything else. That fits right into the wheelhouse of right through here. So this data is going to come in this week. And again, it's one of the top 3 things that the Federal Reserve monitors. So it will be on the top of the radar. Okay, so we went over to what Peter Navarro says about tariffs. Let's get over to the bond market, see how this is reacting. Well, it's kind of making a nice turn right now after some of this data just came in. So we went from a negative 13 when I just started to a positive 2 on the MBSs. So what is the MBSs? So we're going to look at that in the 10-year Treasury right now. You can see this just dropped, and I don't know what's happening. I'll provide this at the closing bell, why we just had a nice little pop in the market. What this is telling us, previously we were down about negative 11. It means rates would go up. Right now we popped up to positive 2. Not enough to really do anything for the markets, but I'm going to look into what happened just now. You can see the bond market right through here took a nice little jump in prices. What happens with prices? When the prices go up, yields come down. So we go to the 10-year Treasury, and yields just went down to 4.18 from 4.25 that was just in there. That's a pretty nice move on the day. What's happening right now on the equities? Let's get over to it. It just turned. So let's see if we can get any headlines here to see what just happened. All right, let's see. S&P falls to start March as economics and tariffs worry swirl. So right now we have red all the way across the board. So that is the reverse of a Cinderella story. And then over here on the VIX, we see the VIX is up again 6 basis points or 6%. That means the inflation or the anxiety level on Wall Street is ticking up quite a bit. We were basically about 15 minutes ago. This was in the green and this was in the red. So something just happened, folks. Let's get over to oil for the inflation front. Below $70 a barrel. That is fantastic news for the inflation. So could this offset what happens with tariffs? Maybe we can check on that. So let's get over the CME FedWatch tool. Is anything changing here? So the CME FedWatch tool basically is a tool that we monitor. I usually try to go through this every day, and I look at it. There's nothing really changing. I don't show it to you, but I bring it up every couple days. And this is basically telling us what the expectations are from the Fed at the next few meetings. So in 16 days, the Federal Reserve is going to meet once again. What are they expected to do? Well, you have to really remember the federal funds rate right now is 4.25 to 4.5. Okay. So if we go over to the FedWatch tool, we scroll down. Right now, it's telling us there is a 95% chance they're going to do what? Well, let's get over to here. This is a little bit easier to read on your end. We'll go to the probabilities. So now there's a 95% chance the federal funds rate will be at 4.25 to 4.5, which it is now. So it's not going to move. The next move or the next potential move in rates coming down would be in May. A little bit of a 55% chance or greater that the Federal Reserve will cut rates at that point. But that is way too far out in the future that I'm not focusing in on. I'm just going to focus in on this week and next week. I think it's going to be a really tight market over the next couple of weeks when it comes to bonds. You can see that's tight right through here. Let's get to a 5-day trading day. It's starting to tight up right through here. So we're going to trade between 100 and 99.8. So that's where I think the trading range is going to be for the next couple of days. So my thought behind all this is mortgage rates are just going to stay stagnant until there's some catalyst that makes things move. And will that catalyst be on Thursday and Friday when the employment numbers start coming out? That's what we're going to focus in on for the week. So that's what we're looking at so far. So I would tell you, our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, before we go there, I want to do a public service announcement. Before you go out and put an application in for a car or a house, like you're watching my videos right now, you need to do one thing, okay? Do you not like getting phone calls from just spammers and scammers and everything else? Well, wonder if I said when I pull your credit or any bank pulls your credit, what happens is your financial data is going to get sold. If you want to stop that, go to optoutprescreener.com. You're going to scroll down to the bottom of the website and just sign up for this. It's going to take you a whopping 2 minutes to do this. You're going to thank me over the long run. So now who I am and what do I do? Well, my name is Dan Frio. To find out more about me and my team, go to therateupdate.com. But here's our slogan here. One application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I work at a federal bank. That makes me licensed throughout the whole country. Cool thing is we're set up with over 30 other banks, lenders, and credit unions. So I can offer you their products, even their perk programs like down payment assistance, specialty products, and things like that they offer. I can offer you my products as well as all theirs. So that's how we go. One application, one credit pool. We're going to shop your loan all over these. And not only do we have their programs, we can offer you their rates. So that's how we do this. So reach out to us to the rateupdate.com. There's about 3 or 4 ways you can reach out to us. Just hit the apply now button right up through there. It's going to launch you right to my website where you can put in your application. It'll come to yours truly, and I'll be calling you probably within hours. Or you can schedule a consultation with me right through here with the schedule a one-on-one consultation. Or you can scroll down, and at the bottom of our website, you're going to find an 800 number as well as my email address. So you can give us a call at 844-775-5626, or you can reach me personally at dan@therateupdate.com. And this is me, folks. So if you have a question for me, shoot that question over to me right here. Make sure you had your phone number in your name so I can reach out to you, answer that question, and maybe anything else that you have at that time. So thanks for watching, folks. Hope to see you back here at the closing bell so we can figure out what happened, how this mess ends for the day. Thanks for watching. Have a great day. Bye-bye.